we move forward, if you're interested in using the same platform and broker that Mitch and I use on a daily basis, go check out TradeNet. Once you're approved for their funded account program, their base package gets you $14,000 in buying power to trade with. There's also no PDT rules, so you can day trade as much as you want. You can short anything that's tradable, and it also comes with a trading course and access to a trading chat room for less than $400. For new traders, I think it makes a ton of sense and really allows them to risk a small amount compared to most other platforms and brokers. And so if you want to check that out, I'll include a link in the description. You should also check out the TradeNet Demo Challenge, which is completely free to enter, and you get 5 trading days with a $10,000 demo account to make $500 in net profit while following their rules. If you do, you win a free intro package on TradeNet. And so if you want to check that out as well, I'll include a link in the description. And so thanks for watching and enjoyed this video. Okay, yeah, so today's class is on understanding ranges in trading, and I thought this was an important class to have. I'm not sure if we had another class on this topic, but ranges in trading are extremely important, and so we'll go into it a little bit here. Range refers to the difference between the low and the high prices for a security or index over a specific period or time frame. A range defines the price spread for a defined period, such as a day, month, year, and indicates the security's price volatility. And so if you've seen me go over ranges before, this is kind of exactly what I showed you guys. The way I calculate range is by looking at the high and low of a stock within a certain time frame. That's the range. The bigger that range, the more that stock is moving on a basis. The smaller the range, the less a stock is essentially moving. And so range is key here, but one of the things that I just want to get started with saying is that one of the big significant things about understanding ranges in trading is that it'll kind of show you where the major support and resistance is. Now, you always want to look for confirmation, and when a stock stays in a specific range, that's essentially what you're getting, is confirmation over and over and over again when it maintains between those highs and lows. Alright, so first let's talk about relevant time frames. So ranges for trading are separated by different time frames. The 2-week range of a stock will obviously be different most of the time than a daily range, usually a little bit bigger. The longer the time frame, the bigger the range. And so if you think about it like this, right? If a stock stays in between, $10 and $15 within a year-long period, that's going to be much bigger than the daily range, unless it's just kind of stayed really choppy with no volume in that area. And so the bigger the range, or the longer the time frame, typically the bigger the range is going to be. But like I said, sometimes stocks are very slow and they don't move at all, and with those situations, the range could essentially be the same thing. But typical rule of thumb, the larger the time frame, the bigger the range is going to be. So like this says, with this in mind, understand that the bigger the time frame, the more significant that particular range is. The high and lows of a larger time framed range will typically be stronger and more influential than smaller ones. Thus, the breaking of that range will play a bigger role in the stock's following moves. And so what this means is that when a stock stays in a particular range for a longer period of time, a lot of the times it's going to confirm those highs and lows multiple times. And when a stock does confirm those levels, they're obviously going to be a little bit stronger than if a stock only bounced off of those levels once. And so that is usually why the bigger the range, the stronger the support and resistance. Or not the bigger the range, the longer time frame, the stronger those highs and lows in that range are going to be. All right, so with that said, we can look at the 1-week range of AMD. It was roughly $1.35. Not a huge range, especially for a stock like AMD that's in the 20s, but it kind of shows you the highs and lows. And so again, it's not a huge range for a stock like AMD. It's not really small either. It's kind of in between. Most likely, if you look at the float of AMD, it's kind of in the middle. But you can see the lows down here and the highs up here. So roughly $1.35 range of AMD for 1 week. And so you can see here, though, that this is the 3-day range of AMD. So if you look at it a little bit closer, you can see a very obvious channel of this range here. And so you can see a 3-day range on AMD. It's roughly 80 cents or so. But the beautiful thing about this is that you can see the confirmation in this range. Like this says down here, notice how AMD uses the highs and lows of the range as support and resistance. If you're understanding this, a light bulb should go off in your head showing how you can potentially profit by understanding the range of a stock. And so if you look at a stock, particularly if a stock is very nicely staying in a certain range for multiple days, then you can make those levels significant and understand that if a stock's going to reverse or bounce, that's usually at the level it's going to do it at. And so, for instance, I know a lot of people dip by panics. They dip by panics. And a good example is over here. If you dip by a panic drop like this, you can base your risk or your entry off of this support down here. But the beautiful thing about it is that you can see multiple confirmations in this range of the stock. Like I said, this range is only a 3-day range, and so as we mentioned earlier, those are typically going to be a little bit smaller. Not always, nothing's 100% in trading, but typically the smaller the time frame, the smaller the range. But again, you can see beautiful confirmation here, and here, and here, and here, and here. And so, very obvious range of this stock. It tried to break under this range, never held, bounced right back up. And you can just see that area acting as major support in this area. Why range is important? So to say it like this, to put things a little clearer, range is calculated and seen by most traders. The longer the time frame, the more potential confirmation in those ranges, and thus more traders are ultimately going to be watching for those levels. This also gives you a good understanding of reasonable risk and reward targets when you're taking trades within those ranges. And so, like we always say, the more people that are watching for a specific thing in the market, the more momentum and validity that level is going to have. And so the more people that see a certain level, the more validity and momentum that level is going to have. And so with that logic, you want to look for things that are very obvious, very defined and concrete that other people are able to see, because that means that they are going to be basing their trades off of those levels as well. And that's ultimately going to help your trade out in the long run. I said it before, trading is kind of one of those things where you kind of want to go with the pack a lot of the times, because going with the pack is going to give you confirmation in the move. And so with that said, you want to look for the more obvious ranges in stocks. The more obvious the range, a lot of the times it's going to work out a little bit easier for you because other traders are trying to take advantage of that exact range in the stock. And so just for an example, if a stock has a very obvious range, and finally, after multiple confirmations in that high or low area, the stock finally breaks out above or below that range, other traders are going to be able to identify that, and they are going to base their trades off of those areas a lot of the time. And that's just going to give it more momentum, because the more people that buy it when it breaks over the highs of that range, the higher the stock's ultimately going to go, and vice versa for shorts. And so I hope that makes sense. So, in trading, you kind of want to have the mindset of you're looking for what everybody else is looking for. You want to see the most concrete levels in trading because that's what everybody else is watching, and that's ultimately going to give you a little bit better odds of success in that trade. All right, so next we can look at intraday range. And really one thing you want to understand about it is that most strategies are taking advantage of these ranges. Of course, there's some strategies that are just momentum with stocks that don't have any range at all. But then there's some that are really, obviously taking advantage of the range. VWAP fade is one, the washout long is one, the red to green move, green to red moves doing the exact same thing on the opposite side. VWAP bounce is doing that thing, taking advantage of the middle range, and a lot more. So most of the strategies that I actually trade are taking advantage of the range of a certain stock. And so it's an important thing to understand. So thinking about it like this, the intraday range refers to the high and low of the day. For day traders specifically, these levels are huge and used often. A lot of times people are watching for high and low of the day breaks. These levels are huge and used often, specifically talking about the high and low of the day, which is the intraday range. One of the most common trade ideas based on these levels is the high and low of the day break. I'm sure everybody's probably heard of the high and low of the day break, and there's a reason why, is because a lot of other traders are watching for it, and so a lot of the time they're going to have a lot of momentum to push up. Like this says, most traders are watching for these level breaks, and thus give the stock more momentum when the said break happens. Okay, so a lot of times people are watching for these levels. Even like this says, I have a scan on trade ideas that's called the high of the day Momo scanner, and I'm sure everybody's probably heard of the high of the day scanner, high of the day Momo. I know Warrior Trading has one too. And so they are scanning for when a stock breaks the high of the intraday range. And of course, there's scans that are scanning for the low of the day breaks, which are breaking the low of the intraday range. As the name suggests, this gives the stock added momentum much of the time, and it will quote unquote break out of that range. A lot of the times these moves are going to be significant. And so here's another example. This is a washout long, whatever you want to call it. You can call it a red to green move. Same exact thing here. It's just breaking out of the range. You can even see a little bit of confirmation in this in pre-market. It had some resistance there. The low down here, you can see the very obvious range right here. If you look right here, you can see some confirmation in pre-market even of the high of that range. And so when you finally get this break here, when you finally get this pullback, it kind of stays within the range. When you finally see the break of the range, it gets a nice volume spike and really pushes up in a pretty significant way. And so that's just one example of, how most strategies are taking advantage of these ranges. All right, and so I think I mentioned this earlier as well, but just to remember and just to touch on it again, a rule of thumb with these is that the longer a stock has stayed in a certain range, the stronger that support and resistance will be around those highs and lows. Consequently, when a stock does actually break those levels and holds, and this is an important thing, when I say holds, I mean it uses the previous high and lows as support or resistance. So if it's previous support, it turns into resistance, and if it's previous resistance, it turns into support if it's breaking the highs. The longer a stock stays in a certain range, the more it's going to confirm those highs and lows, and that's ultimately that's going to mean a few different things. That's going to mean that a lot of the times you can fairly safely base your trade off of those highs and lows, and when it does actually break those levels, the moves can be much more drastic and identifiable. So you'll be able to see them easier because they've stayed in that range. And again, I guess the point I'm trying to get across is that the longer it stays in a range, the more obvious and self-evident that range is. And so when it finally breaks that range, other traders are going to react, and that's going to give it a lot of momentum to go in your direction. Again, once these type of brain breaks do happen, look for them to switch from support to resistance and vice versa, as I mentioned. And so here's an example that I drew up today. You can see the 7-day range of AMD. Really, let me see if I can calculate it. It looks like about 1875 up to 21. So about a 225 range here. And you can see it confirms it multiple times here, here. A little bit of confirmation here, right? And so when you finally get that range break, you can see the range break here. Let me see if it'll let me zoom in a little bit. But when you finally get that range break, you get a significant move down. It stayed in this range for a decent amount of time. It may have actually been a little bit longer than 7 days, but it stayed in this range mostly sideways for a week's time frame. It's confirmed these levels multiple times, highs and lows, and it stayed in that range for about a week. And so when it finally breaks this range here, you can see the big breakdown here. When it finally breaks this range here, it's a pretty significant move. And so another thing to take from this is that when it did break this range, the next day it actually tested that previous low. So like you can see the previous low down here, right around here. It had some confirmation before this. I couldn't get all of it on the screen. But you can see the previous low here. And when it breaks this range, the next day, that previous low, which used to be support, transitions to the opposing side. Instead of support, it is now resistance. And what do you get the following days? You get a really nice breakdown after this previous support turns into resistance and a big downward move for the next few days. And so again, the longer the stock's going to stay in this type of range, the more momentum it's going to have once it actually does break, especially if you get confirmation in those levels. And again, like I said, you get that previous low turning into resistance where it used to have support. All right, so now that we went over that, the next thing you want to think about is that these ranges are a lot of the times where you're going to be basing your risk and reward off of. You know, guys, what do we usually think when we're looking? What do we look for when we're establishing a risk and reward level in a trade? Does anybody know? Right, exactly. Previous levels of support and resistance, or confirmation. You know, we usually want to see confirmation in where we set our risk level and where we set our reward target. And so with ranges in mind, the range is going to show you where that confirmation is. You're going to be able to see those significant levels from different range breaks and bounces and stuff like that. And so a lot of the times you're looking for confirmation, and thus is why understanding the range of a certain stock can help you understand and calculate risk and reward. So like this says, range should be taken into consideration when calculating risk and reward. With both of these, the question you should ask yourself is, where is my most likely reversal point for this stock? Where is the most obvious place that this stock is going to reverse? You know, that's not only where you should set your reward target, but it's also where you should set your risk to a certain extent. You know, that's the whole point of establishing a risk and a reward area and looking for confirmation in those levels, because you're ultimately looking for the most obvious place that that stock may reverse in the opposing direction. For risk, you want to look for the most obvious place that stock is going to get rejected and come back down if you're going short, or go back up if you're going long. So if it actually breaks that level, you could safely and understandably get out of the trade, because at that point it didn't reverse when you wanted it to, and so it's your time to exit the trade. And same thing with your reward target. Where is the most, if you're going short, where is the most obvious place this stock is going to bounce? If you're going long, where's the most obvious place this stock is going to get rejected at? And that way you can take your profits at those levels and understand that that's the most likely place it's going to bounce if you're short, if it's going to bounce at this level, and you can take some profits just in case it does actually do that and reverse to head back up. All right, so yeah, this is Cron. This may have been AMD actually from the other day. And this is one I was actually pretty disappointed about. I was talking to Scott about it in the Discord. But you can see here, so, you know, I got in the VWAP fade right around here. My risk level was up here, looking for the most obvious reversal level. If you use the wicks here, or the body, you can see a pretty decent range up here. And then you can see a very, very obvious range down here at these lows, because that's a reversal spot. Right, that's my reward target. But the reason it's my reward target is because it's the most obvious level that that stock may reverse and head back up. It's the most obvious point in the chart that the likelihood of it bouncing and going back up is the highest at that level, in my opinion. And of course, it's all subjective. But, you know, we did get confirmation in that level. You know, I ended up holding it until it bounced after taking profits around the lows. And it did reverse at that level. It went right down to that exact level and then bounced and got a big push back up here. You know, and some traders are just buying it, anticipating it holding as support right here. But the big thing to take is at the bottom of this range here was the most obvious level that that stock may reverse and head back up. And it confirmed it multiple times even after I exited it. It confirmed it another time here. Eventually it finally broke, and when it did break down and actually hold that level as resistance, it really broke down. And like I said, if you caught the Discord yesterday, I was talking to Scott about it, that I was a little disappointed, but at the same time, I had to leave my house, and so I didn't have time to hold it. But, you know, it kind of shows you understanding the intraday range is significant as well, and you can use those levels to kind of calculate your reward target and your risk while you're in the trade. So the next thing we can look at is smaller ranges. So range isn't really restricted to days. I know a lot of the times I use like the daily range, you know, the week range, the 3-day range, the 2-day range, but it's not necessarily restricted to just, you know, daily ranges. It can be a 5-minute range, like you see with the opening range breakout. You know, if you caught my catastrophic attempt at trading the opening range breakout in the last month or so, it didn't work out well. But that entire strategy revolved around the 5-minute range of that stock, the break of that 5-minute range. Thus is where it gets the name, the opening range breakout. You know, you're looking for that opening range in the first 5-minute candle, and you're getting in when it breaks out past that range. But again, there's an hourly range, a 2-hour range, and so forth and so on. And so, like this says, as traders, you want to learn how to spot and identify ranges regardless of the time frame. You want to be able to condition your mind to just lock on to a certain range. You're going to be looking for highs and lows, and this consists of looking for highs and lows and looking for confirmation in those levels. The more confirmation you get in those levels, the better, and the more valid those levels are ultimately going to be. And again, it goes back to earlier in the PowerPoint how you're looking for what other traders are watching. And so the more times the stock bounces up and down at certain levels over and over and over again, the more traders that are ultimately going to be watching those levels, regardless of the time frame. You know, the more times the stock, that's essentially what a triangle, a wedge is, and everything like that, is that you're looking for confirmation in a certain range. Sometimes the range is getting tighter and tighter, like you see with the triangle pattern. Alright, but like this says, as traders, you want to just start to learn to identify these ranges, regardless of the time frame. You just want to look for confirmation. That's what it is. And this will take some conditioning. It just takes kind of learning and understanding it at first. And it might take a little while for your brain to kind of be conditioned to spot these ranges and to look for them, essentially. But with that, you'll eventually be able to spot and understand the way a stock moves in a much better way once you start to kind of understand how the stocks are going to move in ranges. And so once you can kind of lock onto that, you'll be able to actually kind of see things a little bit clearer with regard to how a stock is moving. And you're going to understand this, and you'll be able to base your trades off of that using that knowledge. And so just to show you that it's not always in days, here is a 3.5-hour range breakout. You know, you have the multiple confirmations. Let me get this out. You get multiple confirmations here, here, a little bit there. And when you finally get a stock breaking out of this range, you get a really nice breakout here and a really nice move up. It doesn't even need to hold as support because it just breaks out way past that. And so you get a much nicer move here. You want to be able to spot these ranges and then look for either A, trades that are breaking out of that range, or B, trades that are taking advantage of in between that range. You know, a good example of in between the range is a VWAP fade. You know, I'm getting in roughly right around the VWAP here, so this isn't a VWAP fade, but you're getting in roughly around the VWAP, and you're looking for it to come back down to the bottom of that range. I mean, sure, if it breaks the bottom of that range, let me see if I can find a different, I'll go over that in the examples. But sure, if it breaks that range, that's great, but the whole goal of the strategy is just to take advantage of the between area in that range, looking for it to come back down and test the bottom of the range. Alright, so example time. Alright, so here's a VWAP rejection, not quite a range, not quite a fade, but a VWAP rejection. But you can see the range here. Maybe if you wanted to get a little bit tighter with it, you could put it up here. But you can see the range of AMD, and this is an example of a strategy or move that's in between the range, right? You're looking to take advantage of moves in between this range, right? And so you get the pullback to the VWAP here, and the whole goal is just to get it down to the bottom of this range down here. And that's where you're going to take profits. And of course, if it breaks the range, that's great. But, you know, the whole goal is to take advantage of the bottom half of the range, looking for it to at least come back down and test this previous low, which is the bottom of the range. And a cool thing here is that if you look over and you scroll over and you document the bottom of this range here, and then you scroll over, you see that area actually holds as resistance in pre-market, and it holds as major support. So wait, let me see. Yeah, you can see it still holds in that, the top of the range still holds down here. The previous bottom of the range is acting as resistance up here now. If we continue to scroll, still resistance, and if we continue, it turned into support. And so you get a constant fluctuation of support and resistance. Here's another example down here. Let me see. Multiple confirmations in this bottom half of this range here for, how long was this? Daily range here. And you see confirmation here, here, here. And so, what you're essentially looking for here, a lot of confirmations there. But what you're essentially looking for is the stock to stay in an obvious channel in that range. If you look at this, right, you have this range formed right here. And it stays in this range even if you ignore all this. It has this big move up. A lot of the times it's going to fill this gap. But it has this big move up. But after the open on the 10th, it stays in this range pretty nicely and very obviously for 3 days. It stayed in this range. It tested the highs. And this is the ideal situation. And it kind of goes back to what I said where, the more obvious the range is, the more I like the trade. Because you get confirmation here, 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 and here. Just for the high. For the lows, you get confirmation here, 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 here. And so when it finally breaks this range, look what it does for the remainder of the rest of the time. It really breaks out on the downside, breaking out of this range really nicely, and has a big drop down for it because other traders are able to identify this range. And so when it finally breaks out underneath it, everybody's jumping in short, dragging this thing down. And so let's see if it ever tests that level again. I thought that was a really good example of just kind of showing you how the more obvious the range, a lot of times the better the move on the way down. And so it broke out on the downside, followed through, and continued dropping here. And even if you fast forward, what is this? That was December 10th. Even if you fast forward a month, that level's still pretty significant here. It's testing it multiple times at least. Still significant here as well. The high, this is a month later, still following that top of the range. So it kind of shows how it'll help you identify major support and resistance as well.